They're there.
Okay.
I assure you. Welcome to WEV Works webinar. We are going to be joined this morning by Marni Brook, who is the WEV Director of Lending, which means that she is the gatekeeper to getting a loan through WEV and a good person to know, but also a very knowledgeable person to listen to. She worked in commercial banking for over 20 years, I think.
25 years almost.
25 years, and was a WEV board member. Were you chair of the board at one point?
I was for 2
years.
Yes.
Prior to joining WEV a couple of years ago. So we have so much gratitude for Marni. She brings so much experience and is so knowledgeable on this subject. So welcome, Marni, and over to you.
Okay, great. Thanks, Nikki. Hello, everybody that I can't see. I will tell you, this is the first time I've actually hosted a webinar of any kind, though it seems like I've spent the past 3 months just living on Zoom, so I'm certainly comfortable with that, but I've never hosted a webinar before. So it's kind of weird not to see all the people that I'm talking to or with. So, but welcome to all of you that are with us today. Really happy that you joined us to talk about something that's really near and dear to me and that I feel is really important. Sometimes, you know, finance and all of that is not the most exciting topic, but as business owners, you all kind of know inherently that this is a really important thing to kind of wrap your arms around. So I do want to say it'd be great if before I kind of launch into the content, if you'd like to, I would like you to share your business, your name and your business name, and maybe a little bit about what you do. It might be evident, by your name, in the chat, because that kind of lets me know who's here, and I'm just always excited to know about, learn about new businesses. Also, just maybe as a food for thought for later, I'd like to know too, you know, do you already have business loans? Did you get them before COVID? Are you comfortable with loans? Is this something that you've always sort of had, you know, to support your business? And then also I'm interested in what specifically made you want to attend this workshop today when you saw it. I mean, I know that we did focus on the fact that we will be talking about updates to the SBA programs, particularly EIDL, the Economic Injury Disaster Loan Program. And you know, just want to talk specifically about how that program can be really beneficial to your business. So that's going to come a little bit later. So anyway, if you want to and you're comfortable doing that, if you can share those things in the chat, that would be really great. So if I may, I'd like to just sort of start by asking this question about what you need for your business to have a successful sort of relaunch and restart, right? So I was sort of stream of consciousness writing this, and I just thought, you know, really, we've all been kind of sitting around in isolation and uncertainty for a time, but now the time has finally come for most business owners, right, to move forward with the reopening and restarting of those businesses, which is really exciting, but also a lot, right? You know, none of us have ever experienced this kind of interruption to our lives, and certainly for you guys' case, for your businesses. So, and for some, sort of the restart is relatively simple. You know, it may not require a lot other than to just rehang your shingle, you know, but for others, it might require restocking, rehiring, remodeling, you know, that you might need to do, or purchasing of items to comply with the requirements that are out there, and to make customers feel comfortable doing business with you. And even for those for whom it is simple, I mean, theoretically, this is a good time to invest in, you know, upgrading websites and marketing your business and all of those things. And all of that costs money, right? And so again, the questions are, so what do you really truly need to put your best foot forward right now? It's almost like, I don't want to call this starting up again, but in some ways it's like that. If you disagree, please chat me about it or tell me how you're feeling about it. But from my perspective, dealing with lots of small business owners, that's how it's feeling for many. And also asking yourself, how can you differentiate your business right now in this COVID/post-COVID world? And then how will you pay for all of those things that you need, right? I know sometimes it's like kind of daunting to think about that. And a lot of people just sort of have the, I'll figure that out when I get there approach. But for purposes of this conversation, you know, I want to talk about the importance of building capital ahead of time, if possible, or planning for it in any case, for your business's successful restart and the sustainability of your business going forward in the COVID and then post-COVID world. I think we're still very much in the COVID world right now, but one day we will be in the post-COVID world, but I think that we all know that might look a little different than things looked before. And as I said, at the end, we will review the SBA updates to make sure that we all understand that and the value of that. And for the most part, I'm not going to be telling, well, that's not entirely true, but to some extent, I won't be telling you things that you probably don't already know about all the different ways that you can access capital. But I will be asking you to keep thinking about these questions because I want the knowledge of what you need and how you can differentiate your business and how you will pay for it and all of those things to inform your decisions about your business going forward. It's just a really important and empowering way to look at this. So with that, I'll just sort of start. I'll launch in. Nikki, I wonder if I can't see chats because I'm not.
Okay.
So anyway, you know what you can do? Maybe, I don't know if you can message me or somehow you can let me know who's chatting or if there are questions as we go or however you want to handle it. But I don't see any, and I'm just sure that some people are chatting. They must be telling me who they are.
You need to hover. Sometimes you have to hover your mouse kind of near the top and it'll pop up the chat. But we have Kelly from Sugar Lab. We have Aileen, who is interested in starting a business. We have Deborah, who's also starting a women's wear design and manufacturing line, and several other people, but those are the ones that have tapped into the chat.
Okay, and you know what? I got it. It actually doesn't appear unless I click my little more.
Exactly. Yeah.
Oops. Okay. Let me move it out of the way up here so I can. You know what? I'm going to cover myself. There we go. Now I don't have to look at me. I'll see your chats instead of my photo. Okay, or my video. Okay. Okay. So I always start this conversation with this question because it's one that's really important to talk about when we start talking about debt. You know, I should have put the second paragraph first. I'm going to start with it. It doesn't matter, does it? So I hear from clients all the time, also not just clients, but people, friends, others, that they hate debt, right? Or that they don't ever like to borrow money, or that they were raised to believe that borrowing money was not a good idea. I get that all the time. And I do understand that because there are certainly times where that is extremely true and people get themselves into trouble with it. But I would like to provide perhaps a slightly different perspective here. And this presentation is not all about debt capital. You know, there are other ways to fund a business besides borrowing, certainly. It's just often one of the most accessible ways, the least complicated way in often cases, can be very inexpensive for business, and can be very useful. So certainly consumer debt, right? Credit card debt, big burying credit card debt that is used to purchase unnecessary items or supplement a lifestyle you can't afford or that sort of thing. That's bad debt. And often the sort of ramifications of it give all other debt a bad rap. People kind of lump it all together as like, oh my God, it's debt, it's terrible. It can be, there's absolutely no doubt. As we'll talk about a little later, there's also some really bad business debt options that you should avoid or should seriously consider, or reach out to experts like myself or others who can help you review those options to make sure that they are okay for you. I've done that a lot with clients that have called. But business debt, okay, when used for its intended purposes, and we'll talk about that a little more, is an investment in your business, right? It's not the same thing as buying a bunch of stuff off Amazon or Wayfair or whatever that you don't really need, but you just love and feel like you want. It's an investment in your business that could and should help you grow your revenue, right? And become more profitable. So that would be things like investing in additional inventory or product lines, investing in upgrading your website to include a more user-friendly shopping cart or shopping experience, hiring web people or designers and photographers to come make sure that your products, services, whatever, are best represented to people in the virtual sort of online world. And all of those things really, again, if you use the money for them, should increase revenue and profitability. And therefore, the cost of that investment, in this case, loan or whatever, the interest expense, right? That's the cost, should be considered a cost of doing business. And the lost opportunity, as it's called sort of in the industry, the opportunity cost of not making that investment is often greater. Of trying to grow completely organically or bootstrap your business. Again, nothing wrong with those things. It's just a much longer road. So it's one way to look at business debt that might be different. Now, I also know that in many cases, people have funded the startup or expansion of their businesses using their personal credit cards and things. And we can talk more about that. There are absolutely ways to set disciplines that will allow you to pay those things down as you should. Again, I'm not advocating for loading a bunch of debt on, but more as you find yourself in certain spaces in your business, like right now, where you have all been forced to sort of take a step back, probably, and evaluate your business, how you do business, pivot your business to try to reach customers sort of where they are, which for the last 3 months has been in their homes. And so again, this is a time to think about how investment in your business, whether that's debt or savings that you have or other things, can help you, again, to put your best foot forward in this sort of fresh start. I mean, there are silver linings here. I know it's hard to find them sometimes, but I feel like in some ways, maybe old practices that were holding you back, you may have been able to put those away now and think about sort of what's next. And investment or capital is really the best way to get there, right? And the goal of being debt-free is still a good one. It absolutely is, but not if it comes at the expense of your cash flow security and freedom to make good decisions. And so what I mean by that is, if you're spending all your money paying down inexpensive debt, fairly inexpensive debt, just to try to get yourself out of debt, and you find yourself always short of cash flow and kind of a prisoner to that scenario, so that you can't make good decisions about moving forward, that's not always the highest and best use of your money. If you already have the debt and it's reasonably priced, again, that's sort of a caveat, then using all your free cash to pay that down is not always the best decision, especially when you could be using that free cash to invest in your business. I hope that makes sense. Again, chat, or you can ask me questions at the end. So as I said, obviously there's a lot of ways to fund a business. This is the part where I'm not going to be telling you not going to be telling you a lot of things you don't already know, but it's good for review. So obviously a lot of businesses are funded with personal savings. A friend of mine just opened, she literally signed the lease on a new beauty salon here in Ventura 3 weeks before the stay-at-home order was issued. So, obviously very devastating, and went through a lot of their personal savings to get it up and running, but it now is up and running. They didn't borrow to do it, but they did use pretty much all their cash to get to this point. So now she finds herself in a situation where she's really short on working capital. So, but that is one way to do it, right? extra months. A lot of times people come to us for loans, but they already have other jobs and they want to start a business. And that extra monthly income that they're getting from their other job does help fund the startup of their new business. And then a lot of times people do get loans or gifts from family or friends. This is great. And we see this a lot. And isn't it wonderful that our family and friends are so generous? But I have seen in my over 25 years of lending and banking that that can be very problematic as well. So I always take this opportunity to tell people, make sure that you document that any agreements that you make with family or friends. I think most people do that now. I hope so. It's very easy to find. You can go online and Google, promissory notes, contracts, those kinds of things, and make one. It will make you more accountable to them and make them more confident from the get-go that this is a legitimate arrangement and that they know what to refer to if something should go awry, right? Also, establish flexibility with payments with them if you can. But bottom line, making sure that everybody involved has the same expectations, because it can create, a lot of angst, tension, and whatnot between you and those loved ones who have been so generous. I've just, again, having seen that many, many times. So friends, family, and savings, obviously good way to do it. It's just, again, sometimes it comes at the expense of having that sort of extra reserve or working capital that is so important to have for any business at any time. But I'm going to advocate for right now that being even more important due to the uncertainty, the ongoing uncertainty around COVID, right? We still don't know exactly what this is going to look like. So working capital reserves, really important to be thinking about. Okay. Everyone's least favorite one, credit cards. I don't think credit cards are always bad. They certainly can be, and they can get out from underneath you very quickly. And that's the danger of credit lines and things like that is, it's sort of like having checks in your checkbook and assuming that means you still have money in the bank. So obviously they're really designed, their highest and best use is short-term, especially if you get things like benefits, rewards. But that would mean that you are able to pay the balance off every month. Again, these are things you already know, but it's a good reminder. But they're not always a bad choice. It's, even if they have high interest, theoretically, if you pay them every month or leave only a very, very small balance, this is not a terrible idea. It's just risky because so long as that available credit exists, there's always that sort of possibility or likelihood that you might use it and might overuse it. And of course, there are a lot of 0% interest credit card offers. That can be a good decision, but it requires from the outset that you establish a repayment discipline for that credit card that has you paying whatever amount off before that introductory period ends. Again, as I think I mentioned before, the other thing about big credit card balances is they can feel really daunting. And a lot of people go through those consolidators or, people that help with debt relief. That's okay, that's fine to do. Sometimes they can negotiate for you. If you have a real problem with too much debt, they can negotiate balances for you, and that can be a good idea. Make sure you're working with a reputable company, of course, but you can also set up your own repayment discipline for credit cards. It's like anything. You could think of the entire balance as a mortgage and amortize it over some period of time. If you need help with that, I can help you. I can help you calculate what it would cost you to pay off your credit card debt in 3 or 5 years or whatever your goal might be. But these are things you can also set up that you may also consider just a cost of doing business. So again, credit cards have their inherent risk, but they're not always a terrible choice. They can be beneficial. And then other personal loans, I always talk to people about this. And so people that own homes are often resistant to leveraging them for their business purposes. But here's what I want to tell you. If you think that if you own a home and think that you can go apply for a business loan without the very strong likelihood that you will have to pledge that home as collateral for that loan anyway, let me tell you that you probably will. You will probably be required to pledge it in any case. So I always just talk about these as options if you own a home, because they are an excellent, excellent way to access cheap, flexible capital to fund either the startup or expansion of your business, or to establish, like, as I said, a working capital reserve. A home equity line of credit is an excellent way to do that. So obviously right now, interest rates on mortgages are incredibly low. I'm currently refinancing my home because rates are less than 3%. So this is a really, even with cash out. And then non-conforming loans are still, which are loans that have a higher loan to value, are at historic lows. So this is a great way to access cheap, flexible, long-term money. And the beauty of a mortgage, right, is the principal repayment discipline is built in right at the front. You're paying back principal from the very beginning. But I also want to advocate for the value of a home equity line of credit. These are also very low rates, and they have the advantage of being a credit line. So you don't have to take all that money right away as you would in a mortgage and start paying interest on it. You can have it there as a backup for your business in the event that you're called on to, you are required to spend a little more money on certain things. You need to hire some people. Again, you need to invest in more inventory. It's a great thing to have available. You only pay interest on what you use. You only pay interest only monthly, or you're only required to, and you have 15 years to repay it. It's a great product if it's available to you. But I do want to say again, sort of like the credit cards, if you borrow on a home equity or any other type of credit line, setting that discipline for principal repayment early is really important and empowering. You know that you're paying it off. And again, even though this is attached to your home, it's all sort of related, right? It's your home, it's your business, it's your success. You can consider this another cost of doing business. Food for thought. I get asked about crowdfunding all the time. I don't know that much about crowdfunding. It's not something that WEV currently does, though we're exploring all kinds of options for where we go from here in terms of providing useful capital for people. But obviously we all basically know what it is, but the definition of it, it's the funding of a project or a venture by raising small amounts from a large number of people, right? I don't know if any of you have ever heard of Kiva. I just mentioned it here because a couple of our loan clients got loans also from Kiva, which is a really interesting crowdfunding model. It's still a loan, but it's, I believe, at 0% interest. So it does get repaid. It's either 0% or some very low amount. And also there's a ton of sort of co-branding and marketing that goes on. I've put their website here just in case you're interested in exploring that. It's a cool model. I think it's very cool. And here's some just sort of bullet points about what, if you're considering this. I know I see here where a couple of the folks on the line are starting a business. Oftentimes this is something people think about, they hear about it and they go, oh, I want to do that. That sounds really great. Then I don't have to apply for a loan and go through all of that. These are things for you to think about if you are considering that, right? You're very comfortable using social media because that's how this is going to happen. You have a local crowd that can also share it out for you. You have confidence asking people for money. You can sell yourself, you can sell your business. You don't provide business to business services because those are typically not appropriate for crowdfunding models. You can devote a ton of time to it, and you need about $15,000 or less. This isn't like science. I mean, I'm sure there are exceptions to these things, but if you kind of check the sort of experts, these are some, there are some consistencies with what they say and in terms of who crowdfunding really works for. And it says here that, as you say, the top 5 are most critical. And so just look into it. Obviously you would, but just advocate, it seems like a really great idea. Great way to kind of get everybody engaged in what you're doing, which is also a cool thing, but does require a lot of work. It will be a lot of work on your part to kind of put it together. It also probably would be helpful to work with somebody that knows more about it and can help you put it together. But also check out Kiva, just see what you think. And WEV has loans. That's what I do. And we are a nonprofit community development lender. We're also an SBA microlender and a Community Development Financial Institution, or CDFI. So those are a lot of acronyms and things like that, but really we're a non-bank lender. We are here to provide loans to small businesses, only in Ventura and Santa Barbara counties, who are not yet qualified for traditional bank financing. But our loans are very similar to bank loans. So it's nice in that way because they're very standard, traditional, not no hidden prepayment penalties or costs or anything of that nature. Unlike some other online type lenders, which we'll talk about a little bit later. So just as an FYI, we've made almost 70 quick response loans. I don't know if any of my quick response people are on the call today, but we made over $500,000 in quick response loans during the initial phases of this crisis. And which was a lot of work, but it was really rewarding. And we were so glad to be able to respond to people in those early phases when there was nothing but uncertainty. Now we're lucky, right? I'll qualify that. We're luckier that we are now moving out of that sort of major crisis mode into hopefully sort of the next phase recovery from COVID. And our loan application activity is reflecting that. We're starting, so this week we launched our Restart loans. These are still COVID related, but these are now up to $25,000 for businesses who are reopening or are already opening, or pardon me, are already open. And they need capital for those things, so for inventory, hiring or rehiring, marketing, website upgrades, or other working capital, things you need, again, for that fresh start that we talked about at the beginning. So it's not for emergency purposes. This is a loan truly for businesses that have a solid plan about how they want to spend this money to put their best foot forward. So that's now available on our website, the application. And then we also have a basic loan program as well. Some people were not as impacted by this crisis, and as I again am seeing here, are looking at this as an opportunity to start new businesses, because unfortunately there won't be as many businesses that exist when we move into recovery, right? Some businesses were not able to stick it out. And so it is a great opportunity in that way for new businesses to emerge. And so we have a basic loan program as well, which provides startup capital up to $25,000. That's for, again, brand new businesses or those that are 12 months old or less. And then expansion capital up to $150,000 for businesses that are now looking at the opportunity to really kind of, again, come out in a big way. And they've been around for more than 12 months. So those are WEV's loans programs currently. And we've been doing these loans since 1991. So we're really good at this. We're really experienced with our loan program. Hopefully most of you are familiar with the Economic Development Collaborative. The EDC, as it's known, is a nonprofit business resource organization that provides technical assistance through their Small Business Development Center and small business loans. They serve both. They're located in Camarillo, but they serve both Santa Barbara and Ventura counties with these products and services. They provide loans of up to $250,000 for small businesses in Santa Barbara and Ventura counties, and then the northern part of LA County as well. So I'm not sure where everybody out there is from, but they do serve like San Fernando Valley and those areas as well. Their loans are also very similar to bank loans and are also for businesses that are not yet qualified for traditional bank financing. Periodically, we get someone that applies that has a really good business and a really good application, and we actually then turn around and refer those back to our banking partners because we think that they will qualify, and if they can get a bank loan, they're not a good fit for us. Okay, and speaking of bank loans, so I'm biased, right? I spent almost 25 years in banking working for a community bank, but I believe this to be very much true, that a good banking relationship is a key factor in the sustainability and success of your business. It absolutely is. There are so many great bankers out there. I don't know if my friend Sabrina is on the phone with us, but Sabrina's an awesome banker, community banker. She works for Wells Fargo Bank, but is a wonderful community banker and a great volunteer for WEV. And they're just absolutely critical, really. Banks are critical, obviously, in the sort of for the financial health of our economy. much as, you know, sometimes they get a bad rap, they're absolutely necessary. And there's so many great people that work in the business. But banks obviously offer term loans. So all of the loans I've referred to from WEV and EDC are term loans. We don't have credit lines. We don't have the capacity to administer credit lines, but banks do. And they have all kinds of different products. But their criteria tend to be a bit more stringent. Their approval criteria, they don't have quite as much flexibility there. And that's just due to the fact that they are audited, regulated by agencies that don't really allow them to. And so, you know, that can seem really hard and harsh, but it's just sort of the nature of the business. But they are great. Our goal is always to get our clients to a point of bankability so we can then pass them on to our great community bankers to kind of take it from there, help the business from there. But they often require that a business be around more than 3 years or at least 3 years. They often are looking for collateral like real estate, inventory, and other things. You have to prove that the business has historical cash flow to pay all of its existing debts and the loan that you're applying for. And you often, you know, and generally speaking, you have to have very, you know, really good credit. These are just general scores. Banks have different requirements. This is pretty safe. 700 is probably the safest number, but in any case, again, you all sort of probably know that. And then I'll just mention briefly these other financing options, which people also ask about all the time. Angels and venture capitalists, right? So these can be really great for businesses that have very high growth potential and will not show a profit for a period of time during their sort of ramp up, maybe their R&D phase or their ramp up phase or whatever. The thing with angels and venture capitalists is that they often have very specific interests. They are only interested in this industry or this type of product, biomed or tech or whatever. It's harder to find angels and venture capitalists that are interested in certainly service-based businesses, retailers, and those kinds of things. They can be very interested in if any of you are in like the sort of specialty food production business, that can be a very interesting option. It often requires a ton of capital to get you where you need to go. And these can be good options for that. The cost of these is high. If you are looking for this type of investment, you have to be prepared to give up some or most of your business ownership in order to do it. There are sometimes other options that exist that don't require you to do that, but they're in it for the big return. And many of them want, that's not a bad thing, right? That's not a bad thing at all. That's just what it is. And so also with these options, there's a lot of pressure. You'll come to these, it's like Shark Tank, right? Those are all venture capitalists, angels. They want to hear your pitch. They want to know what your financials look like. They want to kind of pick them apart. And if you don't meet those numbers, there can be a bit of pressure on you to do that. And that can be hard. Like when you're trying to build a business, it can be hard to have that in the background, putting that sort of pressure on you. And it can sometimes make decisions for you that you wouldn't otherwise make. Right? If you need more information about that, I'm not the person to call. I don't know any. But actually, the Economic Development Collaborative that I mentioned on the prior slide, which I believe is edcollaborative.com is their website. I can put that in the chat, or maybe Nikki can drop that in the chat for me. They do have access to those kinds of contacts sometimes, or at least to consultants that might be able to talk to you a little bit more about that. So that's that. Okay. Before I mentioned, and I don't know, again, if any of you want to kind of share your experience with this in the chat, or we can talk about it after. So FinTech is another name for online lenders. You know these folks as Cabbage, OnDeck, Square, etc. And they are now prevalent. They are, thank you, Nikki. They're a big player. They also were authorized to make PPP loans and are as you probably know, PPP is still open until the end of this month, and so they're still doing that. So it often seems like they're making the process easy, right? You can do it right online. Sometimes you can get your money in, I don't know, a day or two. But sometimes when things seem too good to be true, so my advice to all of you is be very, very cautious. Where I sit here, working again with many small business owners about their getting loans, or just working with them on their cash flow projections, or reviewing other offers of loans for them to make sure that they seem okay for them. We have seen just on numerous occasions horrible loans coming out of these online lenders that seem like they're okay. They seem like, oh, it's only 10% or whatever, but that's actually a monthly or daily rate and not an annual percentage rate. And let's just, as an example, if you have a monthly rate of 10%, then your annual percentage rate is literally 120%. You can just multiply it by 12. And so in many cases, these, again, it's great because you can get access to cash fairly quickly and without a lot of sort of brain damage or, providing lots of information. But obviously, that's going to come at a great cost, just intuitively, right? And it does. So just be sure that you're reading the fine print of these loans offers. And if you aren't sure or you have questions, you can contact me at WEV. I mean, by all means, reach out. And I can review that document with you to make sure that it is what you think it is and it won't turn into something else very quickly. And so, again, I've done that in many cases. I'm happy to do that if anybody is now considering this type of financing as they move forward. I will, again, just like credit cards, they're not always bad. I've seen some pretty good ones, especially from like Square. But I've seen some really bad ones too. So just make sure. It's the last thing you all need right now. Okay. And SBA loans, you all kind of know what they are, but actually maybe you don't. So if I'll just quickly, SBA loans are term loans. They do actually have credit lines as well that are provided by banks normally. Now the EIDL loan that we are going to talk about in a second is provided directly by the SBA. It's the only loan program that's administered directly by the SBA to the borrower. All other SBA loans are provided by banks, through banks, and guaranteed by the Small Business Administration. So the benefits are that they offer longer terms and lower interest rates, so that makes the payments usually lower. And they are usually offered when you don't qualify for a bank's traditional, or you're like just shy of qualifying for a bank's traditional loan program. So you still have to qualify. It's still fully underwritten for cash flow, collateral, and other things. But that's how, so SBA loans have always existed. They always exist. They'll continue to exist after the disaster, but you get them through your bank. I was an SBA lender for many years for a local community bank, and would be happy to talk to anybody if they're interested in this option, more about them. It's a great product. It's a great product. But specifically to where we are now with SBA, right? What everybody's been dealing with over the last few months. We'd like to provide you some updates with regard to Paycheck Protection Program forgiveness, and then also to the EIDL, the Economic Injury Disaster Loan. I'll start with this because this is obviously a very, very sort of hot topic, and Congress has made some changes to the initial bill that provide more flexibility and hopefully more opportunity for forgiveness of these funds for anybody that accepted them, qualified and accepted them. So initially, for under PPP, you were required to spend all that money that you got within 8 weeks of receiving it, which was nuts because most people were closed. Now that they understand that a little bit better, they've extended that period to 24 weeks or December 31st, whichever comes sooner. So this obviously provides a little bit of relief. I mean, 16 weeks more for people or businesses that did accept these funds to get them out And again, hopefully get them out in ways that are eligible for that forgiveness. Initially also, the payroll expenditure, so if you got $100,000, you were required to spend 75% of it on payroll, right? Payroll only, payroll related expenses. They have now lowered that requirement to 60%. So you're now only required to spend 60% of the funds that you received on payroll. The repayment deferral period has also been extended. So repayment will only begin after loan forgiveness is determined. Obviously, if forgiveness is determined, you won't be making any payments. But until that is figured out and actually processed, I know that they've talked about there being potentially some overlap, that payments may need to be made before the forgiveness is determined and processed. But ultimately, again, if these funds hopefully are forgiven, that loan becomes effectively a grant, just capital, free capital for your business. I know that's why it was so attractive, and now we just have to cross our fingers that the forgiveness applications and process go a little bit more smoothly than the actual PPP applications themselves. Hopefully banks and the SBA learned from that interesting scenario. There's now further clarity for employers who cannot rehire employees at the previous rate, right? They just don't need as many. Based on limited capacity, right? Most businesses that have employees and have physical locations and such have to limit the number of people that can be there for social distancing purposes. And then if part of your loan or of your PPP loan is deemed unforgivable, not forgivable, the repayment period is now 5 years as opposed to 2. The lenders have to approve that too. It's hard to imagine that any lender would not approve that, with the possible exception, again, of those online lenders. I don't know. Banks, it seems very likely that they will offer that 5-year repayment. And that's a great benefit, because a 2-year repayment of any loan that's pretty aggressive. That could theoretically end up being a pretty big payment. So that's good. These are all good things. And the application is still open until June 30th. So if you have not applied, or have kind of been putting your head in the sand or putting it off, and you still think it could benefit you, I strongly encourage you to reach out. WEV does have advisors that can help you to determine whether PPP is a good option for you. I think many people took advantage of that and were very assisted by our folks, which was really great. So those are some good news updates on PPP. We're glad that that Congress took those actions. Okay, and then EIDL, which is kind of like, we'll kind of bring it all back around to this, which is an awesome product. Remember how before I talked about the home equity and mortgage products as being really awesome ways to access cheap, long-term, flexible money for your business? Again, understanding that many people are like, oh no, I don't want to do that because, then it's tying up my home for my business. I understand that. Again, I'm still going to advocate for it, but EIDL is similar actually in price and structure to a mortgage loan for your business. It's awesome. The interest rate for for-profit businesses is 3.75%, and most people are receiving a 30-year term on that. And they don't have to make any payments on that loan once they receive it for a year. That gives you a full 12 months once receiving the loan to get benefit of it, and again, hopefully using it as a true investment in the future of your business and the sustainability of your business, and potentially putting a little bit aside for working capital reserve. A full year to kind of re-ramp up your business, relaunch whatever before you ever even have to make a payment. And again, payments are going to be, they couldn't be lower. This is the cheapest business debt that exists. And of course, this is a loan. It is not forgivable. This is, and so there are still some restrictions on what you can use the money for, but it is a loan, must be repaid, but again, under terms that are incredibly favorable for you. So eligible uses of EIDL, again, Economic Injury Disaster Loan, can be used. So eligible uses are working capital. That can include rent, payroll, vendors, and overhead. But do not use PPP and EIDL for the same expenses. Some people received both. Ensure that you are first using PPP for all eligible expenses related to that so that it can be forgiven. But if you only received EIDL or you still haven't heard or you have received an offer, but you don't know whether or not you should accept it, let me strongly encourage you to consider it very carefully based on these things that I have said about how this is the cheapest business debt you can get. What it can't be used for is to pay off existing term loans or credit cards in their entirety. I know that's tempting, but once again, probably not unless those things are at very high rates. The highest and best use of your free cash right now anyway. But in any case, you can't pay them off with EIDL, but you can make your payments with them. So the nice part about that might be that you could use the EIDL money to make the ongoing payments for those things, to keep those current, and reserve the rest of the cash, again, to make investment in your business, to purchase additional inventory, to remodel your space, to make it as awesome as it can be, to hire that one extra person that you really think you need, or a salesperson or whomever, to, again, put your very best foot forward right now. So just remember that we are getting a lot of questions from clients about whether they can pay off their WEV loans with their EIDL. They can't pay them off, but they can make their payments. What a great thing. They can make their payments on my loan with money that's not even going to cost them. They're not going to pay anything on it for 12 months and is only 3 3/4%. That's a pretty good deal. And they get to reserve all the rest of the cash that they have for those wonderful other things that are much more exciting than debt repayment. If you have applied for EIDL and haven't heard back, and there's still plenty of people that haven't, I mean, you can imagine, I mean, there are hundreds and hundreds of thousands of applications. I don't know, maybe even millions. Please email your full name, your application number, EIDL application number, which begins with a 3, and the EIDL, and put in the subject line of your email, this here, you can see it in front of you, SBA EIDL loan status unknown to the Economic Development Collaborative, info@edcollaborative.com. They currently have a direct line to the SBA and the EIDL Processing Center to try and get status reports for businesses that have not heard, so that they at least know their application was received and where it is in the process. And if there's any other information that can be shared about that application. So if you were denied by the SBA for your EIDL, you actually have up to 6 months to reapply for consideration. And if you have been denied, you can reapply for consideration by first emailing that email below. Again, you'll need to, I'm sure, reference your application number. It probably would be helpful to include a copy of the denial letter or notification you received, and indicate that you are interested in being reconsidered for that loan. It can't hurt. I think this, again, as you think about what you truly need, going all the way back to the beginning of this presentation, as you start really thinking about what you need and how you're going to pay for that, now, and not as you go, but now. This is a really, really, really great program for you to consider. We're now starting to hear from a lot of clients that they did get approved for EIDL and that they're so glad they applied because the terms are so incredibly favorable. Again, this is debt. And I do want to be sensitive. I understand the reluctance to take on debt, especially right now with all this uncertainty. But you all are entrepreneurs, right? By your very nature, or by virtue of the fact that you are entrepreneurs, you are risk takers. And part of that is taking that leap of faith that if you invest in your business and you invest again in that best foot forward at this time, that should yield really positive results and increased opportunities for you to grab more customers, to create more revenue and more profit, and all of those things. So those are the SBA updates and reminders that we wanted to give you. So that sort of concludes here's all the ways that you can help fund your business. Excuse me. And now we want to know what questions you have about any of those things. So I see that Hope has raised her hand. Nikki, does that mean that you'll unmute her, or that she'll chat with me, or?
If she could type her question into the Q&A or the chat box.
Hope, are you able to type your question in chat? I'm happy to answer it, I hope. And then anyone else that has questions, and I don't think Nikki, can you type my contact information into the chat? My email?
Okay, so Hope has asked, what's the deadline to apply for the EIDL? Unfortunately, Hope, unless you're an agricultural business,
yeah,
that is not available to you anymore. They were inundated at the beginning of this, especially when they announced the advance. And so it's still closed. I don't know if it will reopen, but
we have no indication of that yet. So this is, so the EIDL updates are really were intended for those that had applied and either hadn't heard or had received an offer but didn't know whether they should accept it or not. And so, unfortunately, EIDL closed a little while ago. And that was really unfortunate because it's such a great product. And EIDL has always existed. It exists after every disaster. Many people received EIDL loans when we had the Thomas fires and other things. And so that always exists, but whether they'll reopen it again after a time, I don't know. The burden on that program from this was great, was enormous. I don't know how much more funding is available for it. So I see that Kim Maxwell's on. Oh, hi, Kim, and is wondering what the interest rates are for our WEV loans. Very good question. Okay, so for the Restart loan that we just launched, the rate is the same as the rate that we offered on our QRL, which is 4.5%. And those loans can be paid back over 5 years. So these two, again, you can see just based on that's still very low rate. Those rates are lower usually than you would get at a bank or anywhere else. So we did intend for our COVID-related products to have lower rates. Also, just because we're talking about it, there is one fee, the $150 processing fee, which we did not charge for quick response loans, but we're trying to now figure out how we sort of, at least basically even just cover our cost of making the loan. We still won't do that with this, but there is a $150 fee. And then if there may be like a $20 collateral filing fee or something like that. So that's the product. And again, the application and all the eligibility requirements and application are on our website, weavonline.org, and under the loan programs tab. So hopefully that answered your question. And then, so I know, so Anonymous says that EIDL sounded great, and now they can't apply. The next best option, okay. So again, the next really best option would be to, if you have access to a home equity or a mortgage or something like that, that's really the best, most flexible, longest term, cheapest option. If not, then and you don't think you'll qualify for a bank loan. Again, I guess I should say in order. If not a mortgage, then you should certainly, if you think you would qualify for a bank loan, certainly approach your banker and see what the options are there. If not that, then WEV or the Economic Development Collaborative are also good options, because those rates, even though they're higher, 4.5% is still very low. It's a very low, affordable rate for unsecured business debt. So So anyway, I would, those are the, and you're welcome to call me directly or email me directly. Nikki dropped my email in the chat, and we can talk more about that. Absolutely. Depends kind of also on how much you need to borrow as to the answer, the real answer to that question. So Anonymous, I hope you answered, that answered your question. Then I see Kelly, who's chatting and said she received her EIDL. I wonder, Kelly, how long did it take? You said she applied March 25th, so very early on. Good for you. Good job. And now, so it says making sure I can use it for almost anything, but how does the advance impact the EIDL? Do you mean so Kelly, you received your EIDL advance and not the full amount? If so, and you don't know the status of your full application, you should do what we had suggested. And let me go back here. I've got, by emailing the Economic Development Collaborative to follow up and see where the status of your full application is. They've been doing a great job responding to clients with that. And I think, you applied a long time ago, so it would be great for you to get an update on that. Okay, I hope that answered your question. Chat again if not. Deborah says, what are the best kind of banks to approach and develop a relationship in Ventura for startup businesses? That's a great question. I am biased, Deborah, because I was a community banker for my entire banking career. So I'm biased a little bit in that way because community banks and even credit unions, who once upon a time couldn't make business loans or didn't do a lot of business banking. They were strictly for members, but now they do. I think that community banks and credit unions are a great choice for startup businesses in particular, because their business bankers are super accessible and can be a great resource for you in a variety of ways. They can kind of be like a one-stop shop, right? Because in community banking, access to experts is all local. So no matter what you need, your business banker can pull all of those local resources together to serve you. Again, that's not to say large banks like Wells Fargo and others, Chase and others, have a very broad spectrum of products, and they're everywhere. And a lot of the people that work there are awesome, and they're great community bankers in their own right. It's just, they might be in some cases a little bit more limited in terms of access, just because, they're huge and they're so spread out. If you want some actual references to banks or credit unions in Ventura, I'm happy to speak with you separately about that. So you can email me because my email's in the chat. So I hope that answered your question, Deborah.
Marni, I wanted to add something about, kind of relates to the question earlier that Anonymous had about the best alternative to the EIDL. And WEV was mentioned toward the end of your answer, but I do want to highlight for everybody out there that working with WEV is a very personalized experience, and that is a huge advantage when either you're starting out or you're not super financially literate, and we can help you kind of put together your loan documentation and just, hold your hand a bit through this process. So I do want to emphasize that, even though an interest rate may be slightly higher, the level of service that you would get from having a lending relationship with WEV is really significant, and leads to lots of other things. So
yeah, thanks, Nikki, for saying that. And that really is true. Having come from both worlds, even community banking, where there is a lot of one-on-one, high-touch sort of experience, WEV is a whole nother level of that, right? And so I appreciate Nikki bringing that up. And I also want to mention that WEV's loan services and all services, our training programs, our coaching, all of it is available in English and Spanish. So we have a bilingual loan officer, for anyone that knows others on this call, perhaps that knows others, or that is on this call and is more comfortable speaking in Spanish, that we do have a bilingual loan officer, Martha, and she's awesome. And to Nikki's point, is very much hands-on, trying to work with our clients to get them across the finish line whenever possible for these loans. So thanks for saying that, Nikki.
Mm-hmm.
I don't see any other chats or questions at this point, but I do want to re-emphasize that I'm available to talk to you all, or if you know others that need, that could maybe benefit from talking to someone about different options and just kind of spitballing and, you know, brainstorming about things. I'm available. That's my job. So, and I love it. I really do. I love hearing about your businesses. I love, you know, those that are now thinking about starting businesses. I admire your courage and your fortitude, especially at this time. And I'm glad that you did join us, if you did today. This will be available on our website as a link. I don't know, at some point, maybe today or tomorrow. I don't know how long it takes, Nikki, but, and if you know someone also that maybe would rather not like have a conversation yet, but just wants to kind of hear the presentation or see the presentation to start getting their mind around what they really need, please refer them to our website. Or again, you can give them my contact information. I'm available. I just want to reiterate it again. This is an opportunity, right? I know it probably doesn't, I'm not sure if it feels that way to most, but I hope you kind of see it that way, and that it is an opportunity to maybe put away some old practices or thought processes that might have been holding you back, you know, and think about what you really need to be the best business that you can be. I don't want to be corny, but, and realize that just the hard fact is that costs money. And here are some options that we've talked about today about ways you might think about getting it, or at very least preserving the cash you do have to help fund your best foot forward from here.
Thank you, Marni. That's as good a lesson on banking and financing, and as friendly a lesson and as clear a lesson as you can possibly get. So thank you again, Marni. That was just terrific, comprehensive, and another shout out for the Restart loan that's now available, hot off the press in terms of loan products. And thank you to everybody that attended. So that'll wrap it up. Have
okay,
a great
great. Thanks, everybody.
All right,
Good
take
luck
care.
with everything. Good luck. Okay, go get it.
Bye.